Hi there, YouTube chart board. Going to check in on Bitcoin on the macro term view. So going back into history, we'll start off at the Genesis block, so around the year 2010. So put it quite simply, every time we broke an all-time high, we got this huge percentage moves to the upside. So once the all-time high broke, we got a 3,500% move. The next all-time high, a 1,500% move. So you can call this another halvening as well. So if we want to approach the next cycle with a more conservative view, we're looking at a percentage upwards momentum of over 800%, reaching a potential price target of 200,000. Next, we'll put up the TT sequential. So every time we broke the all-time highs, it was on a P8 or a P9. So usually after a P9, you expect sideways consolidation, a 1 to 4 months of consolidation, but the price kept going. So green one and then a green two. So green two above a green one, that's your macro term time frame entry. So no consolidation, just straight continuation for the bulls. Same with the previous cycle. We got a P9, a green one, and then a green two. So green two above a green one above the highs of P9, and then a break of risk line. And then we have accelerated momentum to at least another TD cycle on a P9. So we're looking back, we have the same scenario right here. We're breaking the all-time highs on a P9, and we're currently at a green one. So the next macro time frame entry would be the month of February to be a green 2 above the risk line, so close on a closing basis over 40,900, and then we'll have a green 2 candle above a green 1 above the highs of uh, green 1. So that's your macro term entry, and then we would expect price to have upwards momentum to at least another TDP9 sell signal on the monthly term time frame. So monthly time frame, everything's looking just fine for the bulls. We're waiting for a monthly close above the risk line, just as we had back in 2017, where we had this huge uh, upwards move. So TD sequential, very bullish on the macro term time frame, and then looking back at price action, also very much bullish. So let's remove these indicators for now. We'll check in on um, the Elliott wave perspective on Bitcoin. So to state it simply, I'm considering this move up and this move down, so the COVID low, as our basis with a 1, 2. So my target based on the price range is still 200,000. And then I would expect if this is a 1, 2, so 1, 2, and then our third wave to be around this region here, and then our fourth and then our fifth wave potentially there. So a 1, 2, and then we're in the making of an aggressive third wave up, and then we'll have some kind of consolidation, fourth wave later this year, and then a final fifth wave breaking upwards. So this is our start 1, 2, 3, 4, and 5. So zooming into the 3-day time frame, we can clearly see this is a 1, 2, 3, 4, and 5. So 5 waves within this subwave 1, and then we look for an ABC type of correction. And then if you zoom into the C wave, you can see 1, 2, 3, 4, and 5. So a deep retracement for our second wave. Usually you would expect the second wave to hit the 50 on the Fibonacci or the 618. So you take it from the bottom all the way to your first impulse, and then you would expect the 50 or the 618 to be hit, but this almost retraced 90%. But still, it's very valid. It's just a little bit deep for a second wave. So weekly, a 1-2, we are in the progress of making an aggressive third wave before consolidating for our fourth and then our final fifth wave. So zooming into this structure right here, this to me doesn't look complete yet. So I'll open up my Elliott wave analysis. So the daily time frame, within this 1-2, this to me is still the beginning of our big third wave. So in my opinion, it is still very hard to count because of the shallow retracements that we saw right here. This actually is the biggest retracement. So what I'm doing is from the COVID low around the $3,000 mark. This is our one, two, third wave up, fourth wave consolidation, and then our fifth wave within the first impulse. And this wave two right here, the second wave two, was a shallow retracement, but still it is the strongest retracement that we have seen during this entire run up. So it only went to the 0.236. Usually you would expect the second wave to hit the 50 or the 618, but it's very shallow. So within strong markets, or I should say highly momentum markets, it can happen that the second wave retraces um, very shallow, but the chances of that happening are very low. Still, this is my 1-2. So on the 3-day time frame, I'm watching the completion of the bigger third wave structure right here. So a 1-2, and then this third wave, fourth wave, and then our fifth wave up to complete the big three. So within this third wave, this subwave to me is not yet finished. I'll zoom into the daily time frame to see what's going on. So within the structure, we had a type of equilibrium pattern at the daily time frame. And to me, usually it was a bearish signal. Whenever you have a huge price drop and you have an equilibrium pattern, you expect the price to follow the previous trend. But that didn't happen. So what we had was accelerated momentum to the downside, a combination of 1-2s, build up momentum, and then we had this explosive move upwards. So following the encircled 1 and 2, we can see that we are in the progress of finishing up this third wave right here. But this third wave is very extended because of the 1-2, 1-2, and another 1-2 combination. So within the encircled 1-2, we can see we have a 1-2 third wave up, ABC corrective wave for our fourth, and then this structure right here is almost completing with a 1, 2, 3, 4, and then most likely another move, another bullish move upwards towards the 50k mark to complete our third wave, the encircled third wave. So after this third wave, I'm expecting us to consolidate towards the 28,000 zone and then to reach the upwards fifth wave to complete our third wave. So zooming into the 3-day time frame, it will look something like this. So within this 1-2, we are trying to complete our second impulsive wave of the low. So a 1-2, 3 wave up, fourth wave down, fifth wave up to complete the third wave right here. And then we have our fourth wave and then a potential fifth wave up to complete the macro cycle for Bitcoin. So that's it for the Elliott wave analysis. I'm still expecting a move upwards towards the 50,000 zone. And then next, you can use their FIP extension tools as well. So I'll start off with the first one. So what I'm doing is I'm taking it from the first impulse to the second low. So a 1-2, and then we can see we almost hit the 1618 at 43,000. So the macro term target is still the 2618 up at 189,000. And then if we take our other FIP extension for our second impulse or 1-2, we can see we hit the 1.272, and then our macro term target is also up at 200,000. So a lot of signals are pointing out that 200,000 might be the end of our long-term cycle. But for now, bulls have all the momentum. So why do I think that the Bitcoin bulls aren't finished yet? It is also based on the TD sequential. So 2 weekly time frame, still on a 7 of 9. So one more month at least to the upside until we reach another P9 sell signal. Then we would have to re-evaluate if the monthly, or I should say the 2 weekly, consolidates for 1 to 4 bars and then moves in the direction of the trend, which is up. So 2 weekly time frame still momentum to the upside, weekly time frame on a 7 of 9. So at least 2.5 weeks of more upside. The 3-day time frame as well on a 7 of 9. So macro term time frames are still very much bullish. We'll zoom into the daily time frame. We had a 9. So we're expecting a 1 to 4 bar consolidation. So if we don't break the lows of 30,000, this is still within the consolidation zone. So we are hoping, our bulls are hoping within the next 2 days to confirm a green one, then a green two, and then a move towards the all-time highs. So daily time frame is still looking strong. We'll zoom in to the bitstamp chart to get a little bit more clarity. So daily time frame, we covered that. 12-hour time frame, we were on a 9 expecting some consolidation. Consolidation was longer than 4 bars, but the bearish trend so made it to a red 6 and didn't make it to a red 9. So bearish momentum on the 12-hour time frame is a little bit fading. So the $30,000 mark is the most important line in the sand for the macro bulls. The 6-hour time frame is where it's at. So we had our huge drop, our run up. So right now on the 6-hour time frame, we are expecting a equilibrium pattern. If it breaks bullish, which it most likely will in my opinion, then we would zoom out to the 12-hour time frame and expect a 12-hour lower high, so around the $38,000-$39,000 mark, and then a higher low, so a tightening range into next week before a potential move towards the all-time highs. So 6-hour time frame needs to hold the 30,000 level, break the 6-hour equilibrium bullish, and then we would expect a lower high tightening range into next week, and then most likely continuation up. So 4-hour and 6-hour, very important to me. We shouldn't be closing below TD support. So what happens if the 30,000 level breaks? Then in my opinion, we can see further downside momentum and much further than we anticipate. So if the 30,000 level breaks and we get a 4-hour close below the TD support, which is up at 30,000, then I would zoom out to the weekly time frame and potentially have this order block structure right here as my support. Excuse me, I think it's up at the 3-day time frame. Here it is. This would be my only support level if the $30,000 mark breaks, just because this huge run up didn't build much support, and this is the last consolidation block after our huge run up. So I would be scaling in if the $30,000 mark breaks, which is in my opinion unlikely, but if that happens, I have a plan and I will be scaling in starting at the $25,000 zone all the way down to 24,000. So keep your eyes on the 6-hour and 4-hour equilibrium pattern and have your game plans established if we break the $30,000 level. So good luck trading, guys. Bye.